Hey, Mark from Caliber Home Loans. It is Friday, the 10th of January. Happy Friday. So, boy, we've had an interesting week, end of last week, this week, with the Iran issue. First we were up, then we were down, then we're up. So, let's take a look at today's chart. So, we're going to end up a little bit better than we opened, which puts a little bit downward pressure on rates for the day. Not enough to actually change the rate during the course of the day, but it's good. At least the trend is in the right direction. So let's take a look at this week, and we can see that. Hang on 1 second. There we go. Thursday at about 9 o'clock in the morning, the bond market hit its lowest for the week, which pushed rates up, and then as we moved through the week, and it looks like Iran was a one and done with them. The markets came back. The stock market came back. The bond market actually came back. So we're going to end up almost where we started for the week. So it's pretty much, which is better than having rates go up. So with all of this turmoil going on during the course of the week, we're going to end up right where we started. So let's take a look at the last month. So we do see the upward trend still continues, even though we have this small dip because of Iran. But the upward trend continues. So that, again, this is bond pricing. So this is pushing rates down. So today the news came out that the employment numbers were actually worse than what was expected, which is actually good for the bond market. And the increase in wages was less than expected, which is also good for the bond market. And the reason for this is that anything that's good for Main Street is considered inflationary. Bond holders, the only way for them to make money in an environment with future inflation is to push rates up, so the yield goes up. So when the markets see that the economy is not as strong as it could be, that actually means that inflation should not be an issue, and they can bring rates down a little bit, or they're not going to push rates up. So that's kind of where we're at. I mean, we're still in this holding pattern. Freddie Mac has decided that they came out with a report, the first 6 months of this year, that we're going to kind of hold steady as far as rates go. I tend to believe that given depending on what goes on internationally, but as long as there's no more surprises, rates should pretty much hold where they are. Now, as we get closer to the election, anything gives, because it just depends on who you think is going to win the election. So the markets will probably get a lot more volatile as we move towards November and through the primaries and whatnot. But at least for the first 6 months, we should be pretty much where we are. Of course, we're going to have the daily and weekly ups and downs, but it should remain somewhat consistent. Mishta is about a week behind, so they're catching up. I had 3 Mishta calls in the last 24 hours. So people are out there thinking about buying houses. The pre-approvals are certainly cranked up. I've heard from some of the realtors that they're getting more calls and business is increasing. So that's good to know. So again, I'll be around all weekend. Let me know if there's anything I can do for you. 248-705-8431. And be careful out there. We're supposed to get ice and sleet and God knows what else. So it is Michigan. So if you're out and about, just be careful. Thanks a lot. Have a great weekend. Bye-bye.